Hello, welcome to Finding Your Way. And today we're dealing with risk and business insurance with professional insurance broker Evelinne Crawford. She has over about 25 years of experience in the insurance business as a fully certified broker and a successful businesswoman herself, and she's here to talk about the ins and outs of insurance fundamentals for small business. So I'm going to be providing a slideshow as Evelinne goes. But Evelinne, do you want to introduce yourself a little more thoroughly than I've done so far?
Thank you. Yes, my name is Evelinne Crawford. I entered the industry in the year 2000, so I have been a licensed insurance broker since then for 25 years. Oh my goodness. I started off doing personal lines, meaning I worked on home and auto the first couple of years in my career. And then I was really intrigued by business insurance. So I specialized myself. Now I'm a specialized broker and I deal with commercial insurance, all types. I don't focus on just the oil and gas. I'm a generalist. I have a small business, so I do a little bit of everything, which keeps it really interesting. Um, I worked for various brokerages throughout my early career. In 2011, I co-founded Caliber Insurance Solutions. I worked with a business partner for 4 years. And as in a lot of cases, our focus on business was a little different. Our goals were a little different than what we expected. So I broke out on my own and started Caliber Insurance Brokers in 2015. So just this past June, we celebrated our 10-year anniversary. And my God, time is just flying by. I really enjoy looking after clients. Our office is a boutique brokerage, meaning that we are still old school. We are never going to be a call center. When people call our office, we answer the phone or call back as soon as we're able to if we're already on the phone. We encourage people to come into our office. You're not going to be a number. We encourage people to have coffee with us. We do little things like annual golf tournaments. I mean, we keep that interaction going. And I really like to let our clients know that we value their business. Uh, you're not just a number. We are old school, like I said, and we are very professional about what we do because we like to sleep at night. And it gives us a lot of pride when clients send us a thank you note or they just let us know that they're happy as well. That's what it's all about, is the connection, the relationship, and how to keep everything going as smoothly as possible in this difficult uh, time in our world and expensive time in our world. So thank you for joining us, Jane, and for anybody that comes in between. I'm not here to sell. I'm here to just show you what it is that you may need for your business so that you don't have any gaps in coverage. Because if something was to happen to you where a claim was put forth against you, it just may stop you from continuing your business. Who can recover from a huge loss? So this is where I come in, and this is where insurance becomes an important part of your business.
Yes, thank you, Evelinne. And we do have a slideshow presentation that I'll be controlling as you speak. But I want to reiterate, yeah, we live in uncertain times. There's a lot of risks in our world, global and local, and perhaps insurance has never been more important than it is right now. So let's get started here. I'll pull up the slideshow.
Thank you.
All right.
So this is a course that I teach about 4 times a year at Career Anderson Training Institute. It's a school for entrepreneur or people that are looking to become entrepreneurs. It's like a government funded program. and they have various speakers, and I'm one of them that covers the insurance. So this has worked for me since 2012, so I thought I'd share it with you. I've shortened it as much as possible. I usually do half days, but this is an hour session, so forgive me if I go a little quick, but feel free to stop me and ask any questions. Next. So our objectives today will be to find out what the philosophy of insurance is, how our legal system plays part in insurance, how risk management plays part in insurance, the difference between a broker and a direct writer. We'll go over a few types of insurance. There's many, but we'll go through the most popular out there. And hopefully at the end, we'll have time for a little bit of open discussion and Q&A. So what is the philosophy of insurance? We can go to the next one. Basically, it's very simple. The losses of few are spread among the many policyholders. Insurance ideally puts you back in the same financial position as just prior to a loss, no more, no less. And how does our legal system play part in insurance? That's something that we have to be conscious of. In Canada, we have two legal systems. We have the common law, which is in every province of Canada except Quebec. Quebec has its own civil code. And the reason I mention this is because, as you probably already know, a policy is a contract. A piece of paper is a contract. So depending on where you are, and if you decide to do business in Quebec, just be mindful of the differences in our legal system. And forgive me if I go very quickly. Risk management and insurance go together hand in hand. Yes, a policy is there to protect you, but insurance companies also expect you to play your part in taking care of exposures that may give rise to a claim. So I guess you can do the next one. Risk management will help you to identify all important and significant risks to your business. And every business is different, so you have to pay close attention to what your needs are versus your the tenant next door to you. Evaluation of frequency and severity of losses will help you prepare for future. It helps in the development and select method for managing risk customized to your business. By implementing risk management methods, your business becomes more attractive to insurance carriers. And by monitoring the performance and suitability of the risk management practices on an ongoing basis will make you better prepared and more able to predict future occurrences. Now, I also like to make this a little bit interactive. Randall, would you mind sharing a risk management practice that you use for your business?
A risk management practice that we, yes. Well, that's a good question. We do have a third-party liability insurance because some of the decisions that we make at Wayfinders have implications for our members. It's not that we put them at risk, but there can be situations where people misunderstand what we are doing, what we're trying to achieve, and they feel that they are at risk. So, I mean, in theory, we could be sued for some of our activities. But what we do to prevent that is not just the insurance, that's the backup, right? What we do is we try to vet a lot of our services through a screen, let's say, a filter of potential risks for our members. Does that make sense?
It does. Very good. Very good. Thank you for sharing that, Randall. Jay, would you mind sharing risk management practice that you would use on your business? Oh, you're on mute.
Sorry about that. I'm a member of the International Coaching Federation, and I follow their ethical guidelines for coaching. And I also get an insurance policy through the International Coaching Federation that they have set up for us. So I've been doing that for quite some time.
Right. So when you get an insurance policy, that means you are transferring risk to somebody else, which is your policy, your insurance carrier. And when we have a business, you are expected to be mindful of what things you can do to minimize risk. And this is risk management. If somebody has a store, for example, you want to make sure that you have proper exit signs, that you have sprinklers in the event of a fire, that faulty staircase is working so nobody slips and fall and injures themselves. So that's your basic risk management practice that you do. And like I said, every business is different. So every business will have different things that they go through on a daily basis to ensure that their business is running smoothly and safe. Thank you both for sharing. I'll go to the next slide. Now, in our country, we have a mix of brokers and direct writers. Does anybody know what the difference between the two is? If not, I will let you know right now.
Yeah, no, I'm not that clear about it.
Okay, great. So a broker is your advocate. A broker does not work for an insurance company. Caliber Insurance Brokers is a broker. We don't work for Intact. We don't work for Aviva. We just procure insurance through them for our clients. We're the middle people. So because we are independent like that, we have your best interest at heart, our client's best interest at heart. And a broker will provide you with unbiased advice in the event of a claim and can be your representative. Now, the direct writer is an agent. They work for an insurance company. So our direct writer works for the best interest of the insurance company. They will look after the insurance company's interest in the event of a claim. And I'll give you an example here. Direct writers are AMA Insurance, Sonnet Insurance, Desjardins, Co-operators. So they work, the people that handle your policies are agents, and they only sell the product that their carrier sells. That's it. They don't have any options. So when prices go up, it doesn't matter. That's all they can sell you is their product. As a broker, we can contact Aviva, Intact, Economical, Portage. So we can look for the best pricing for you. As well, because a direct writer's has the company's best interest at heart, it could be not so good for the client. And my first job in insurance was with AMA Insurance. And I'll give you an example of the difference between the two. So if you were to call Evelinne at AMA and you backed into a post with your vehicle, there's no bodily injury, but the car was schmucked. You call me at AMA and tell me, Evelinne, I just backed into something. What do? I said, when did it happen? Did you take it for an estimate? Okay, I'm going to send you to our preferred mechanics. They'll fix the car for you. Wonderful. So the client is happy until the renewal comes up and their prices are just astronomical. And that's because once you have an accident, you go from a 6-star rating down to a 0. So your prices are humongous. Now you call Evelinne, the broker, with the same issue, and I'm going to say to you, is anybody hurt? No? Great. Have you got an estimate? Yes. How much is the estimate? It's $2,500. We're just hypothetically speaking here. And I will tell you, well, your deductible is $1,000. All you're going to get out of this is $1,500 for repairs. Now, you're also going to go down to 0. So not only are you only getting $1,500 from this, but now your rates are going to go from $1,500 a month to $5,000 a year. I'm sorry. And it's not going to get better for another 6 years, because every year that goes by, you get your star rating back. But for the next 6 years, you're going to be spending maybe 10 times more than what you would have spent on that $1,500 repair. So that's the difference. We will give you good advice, whereas the direct writer looks after the insurance company, because that's how they get their promotions, that's how they get the races.
That's a critical, important thing to know about. It's a big difference.
Exactly, a huge difference. And another thing too is that direct writers, when it comes to commercial insurance, they usually handle small business, and they don't have the expertise. Very limited as to what they can do, and a lot of times it's done incorrectly. I've come across a lot of policies where people have many gaps, or just done so bad that it would have become null and void should have there been a claim. So very important to pay attention to that. Next. Types of insurance. We're going to quickly go through a few things here. Next. The most common, of course, is property insurance, whether it's real property like a home or a commercial building, equipment, tools, whatever. It could be business contents. Then we also have, excuse me, we have general liability. We have business interruption, that's very commonly used. Automobile, almost everyone owns a vehicle. And umbrella liability. Those are the main ones that we're going to focus on today for the purpose of this seminar. Next. So the term property insurance includes all types of property, such as building, equipment, stock, tools, office contents, etc. And it's normally referred to as property of every description on a policy. And they shorten it by calling it POED, property of every description. In the case of real property, such as buildings, most commercial insurance policies are subject to a co-insurance clause, which requires that your property insurance limit is up to a minimum percentage of the total value of the property. And that percentage is usually 90%. Some policy will see 80, but 90% of the time it's 90%. If the insurance placed is equal or greater than the percentage value required, there is no co-insurance penalty in the event of a loss. However, if the amount of insurance is less than the required percentage, a penalty will apply. And that becomes very important when you have a big structure that's worth a lot of, which has a lot of value. And I'll give you an example here. Next. So, if you hypothetically have a building that's worth $1 million, the insurance company wants you to insure it to at least 90% of its value, which is $900,000. Some people want to cheat the system a bit, and they say, no, my building is only worth $600,000. That way their premium is not as expensive. But lo and behold, there's a fire worth $250,000. Now, the insurance company is not going to want to pay the full $250,000, being that you didn't insure the building to value. So there is a formula to calculate that. Next. So the formula is that you divide what you did insure the building for over what you should have insured it for, and you times that by the amount of loss, which in this case, the example was $250,000. And that equals to what they will pay you. Can you go back a little bit again, Randall? So in this case, the co-insurance penalty will be, so 900 times the 250, the did over should, they'll only want to pay you 166,670 out of the 250. Because again, instead of insuring it for 900,000, you only insured it for the 600,000. So they'll penalize you for that short amount. That's a lot to take in. Don't worry about it. You can always call your broker and ask to be refreshed on that. But I just wanted to bring it to your attention. Should you ever accidentally insure something for under the value. And that's not just for building, that includes equipment, tools, so that way you're not short in the event of a loss. Next, and next. So liability insurance is coverage for bodily injury and property damage to a third party, to somebody else. It does not cover you. It protects the insured, that's you, in the event of a claim that comes within the coverage of the insurance policy. The insurance carrier, whether it's Aviva, Intact, whoever, has the duty and right to defend you. It pays for the cost of legal defense. And the limit of liability required varies from industry to industry. So sometimes you may feel that $1 million is enough, but certain industries will tell you, no, we need you to carry 5 million. That's the minimum if you want to stay in business. So that varies from every industry. And also, if you don't have a limit required, that also depends on what you feel comfortable with. An insurer, the insurance company, they have the duty to defend, indemnify, and the duty to settle a reasonably clear claim on your behalf. Next. Now, I just want to get an example before we jump into business interruption. Do you have any liability examples, just general liability on your part, Randall, not the errors and omissions?
Yes. For example, we offer some live in-person networking events. One of these places has stairs. Okay. It's a cafe that we go to the second floor, and the only way to access that is on the stairs. Some of our members are elderly and have difficulty with stairs. Now, I'm thinking that we might be liable if somebody has let's say, a fall.
Right.
Is that an example?
That's a good example. And whether you're liable or not, when something happens, when there's an injury, when a lawyer gets involved, they're going to go after anybody that's remotely connected to the incident. So they may go after you, they may go after the building owner, they may go after the tenant of that building. They look for wherever the deepest pockets are. And then there's a process of elimination, and they do the investigation and determine who exactly was liable. But in the meantime, you may be 100% not liable. However, your insurance policy will kick in, and they will defend you, and you won't have to spend money on court costs or defense costs, I'm sorry, while that investigation is going through.
All right.
Does that make sense?
Yeah, it's good to know.
Good. Jane, do you have any examples? Oh, you're mute again.
Sorry about that. I don't have any examples. I do most of my work on Zoom, and the people are anywhere in the world, and we're just communicating that way. So it's more.
You have other different exposures. Your general liability is very low exposure, so that's good. And you have liability in the cyber world, and then errors and omissions. So I guess we can go to the next slide. Business interruption is a really important part of your policy. Some people get liability without any business interruption, and that's fine. It's all up to the individual and what they feel they need and what they can absorb if some business interruption loss was to happen. So this is the type of coverage for loss of income that a business suffers after a disaster. The income loss may be due to disaster-related closing of the business, or due to the length of time of rebuilding the business after a disaster like a fire. So some types of business interruption here: profits that would have been earned based on prior months. To determine these numbers, of course, the adjuster is going to want your I'm sorry, sometimes I lose my train of thought after my concussion, which I've been suffering for a couple of years. So they'll want to see your books, your bookkeeping to see where you're at. Fixed costs, those are coverage for operating expenses and other costs still being incurred by the property based on historical costs. So if you have a building that burned down, but you still need to continue your business and you rent somewhere else, your existing building that's being repaired, you still have to pay rent or mortgage or utilities. So those are fixed costs that you can't get rid of. So you do have, you can get coverage for such losses. Extra expense is the reimbursement of a reasonable expense beyond fixed costs that allow the business to continue operating while the property is being repaired. So as I had mentioned, your building burned down, you have to go somewhere else. Well, it's an extra cost to go rent another room or rent equipment while your initial stuff is being repaired. So that's extra expense, and most policies have that in the extensions if you buy the extensions. The profits and fixed costs are a little different, more expensive, but they do exist. So if you ever have that need, you can always discuss with your agent or broker. Next. Auto insurance. This is probably going to be a refresher for you because you all have a policy and are sort of hopefully familiar with it. So coverage for vehicles starts with your third-party liability. It's very similar to your general liability, but this is only regarding losses arising from the operation of your vehicle. So bodily injury, property damage to somebody else arising from the operation of your vehicle. Physical damage coverage to your own vehicle is optional if the vehicle is paid in full, not financed. You can purchase all perils coverage, which covers you for everything, or you can divide, most people divide it into collision and comprehensive coverage. Collision covers you for collision, and comprehensive coverage covers you for such things as a windstorm, hail, your vehicle gets stolen, rising water, falling objects, and such. You can also go with just specified perils. It's a little cheaper, but comprehensive and specified are very similar. I would go with a comprehensive. Other optional coverages by endorsement is loss of use. So if your vehicle has full coverage, you can purchase loss of use. So if your vehicle is involved in an accident, you're able to rent a vehicle at with the limit that the loss of use offers. Most people exclude glass coverage, and the reason for that is because if your deductible is $1,000 for comprehensive coverage and your windshield costs $800-900 to replace, it doesn't make sense to put it through to insurance. You just pay it on your own, and you get that extra little credit by not by having that glass coverage taken out of the equation. Waiver of depreciation. If you buy a brand new vehicle and you're the original owner of the vehicle, you can get an endorsement called 43R or 43L. So that means if you write off the vehicle, say a month after you purchased it, you will get the amount that you paid for the vehicle rather than the depreciated value, because value goes down as soon as you drive it off the lot. So that protects you for either 18 months or 2 years, depending on which company you go. They have different lengths of time that you can carry this endorsement.
Evelinne, I have a
Yes.
question on this. There's a lot of people in small business have their own personal car,
Mhm.
but but they might occasionally use it for business. Is there any
Right.
kind of where do you draw the line, kind of demarcation about business use for insurance purposes?
Right. So that's an easy one. You have with auto, you have commercial auto and you have personal auto. Business use falls under personal. You just change the use of the vehicle from O2, which is to and from work and personal use, and you change it to O7, which means that you do use the vehicle for business purposes to see clients, make bank deposit, buy product, etc. And what you do in order to write off that portion, you just call your broker and say, what is the difference between personal and business? Because the difference you can write off for your taxes.
So this is important for the average small business person to know,
Yeah,
because they may not use that car very often, but occasionally they do use it for business purposes.
that's right.
Yeah.
And with things being so difficult in Alberta with auto, if you're using your vehicle for business or commercial use without having properly insured your vehicle, the insurance company can null and void your policy and deny the claim, and you're hooped.
Right.
So it's always a good idea to, if you're not sure, call your agent or broker and say, this is what I'm doing. What do I do to make sure that I'm covering all my bases?
All right. Thank you.
You're welcome. Coverage for damage to non-owned automobiles, that comes out of your general liability policy. You can actually get that coverage, which is very important and overlooked. If you have a small business and you hire a couple of people to do your errands for you, and they use their own vehicle, and they get into an accident, but they happen to be underinsured or not insured at all, that coverage actually picks up the liability because your employee can come after you for that. So very important. If you need any clarification on that, feel free to call me after the session, but very important. The application for auto insurance is called the SPF1, and it's the same application that we use for personal and commercial. The only difference is that with commercial, there is an additional form called the commercial vehicle supplement form. For commercial use, it's usually stuff like you're doing, you drive to the oil and gas sites, or you're a carpenter and you haul material and you go from site to site. That would be commercial. That doesn't fit under the business. So that's why there's two separate departments. The minimum liability limit required in Alberta to legally be on the road is 200,000. Some people ask for that because it's a lot cheaper, of course. And some brokerages or agencies offer that. I don't. Minimum for me, I like it to be 2 million, because if you were to injure somebody by the operation of your vehicle and maim them for life, $200,000 is not enough for anything if you ever get sued by somebody that's going to need medical care for the rest of their lives. So I believe for anyone to be on the road, they have to do the right thing and get a minimum $1 million, but I recommend 2 million in today's economy. Next. Umbrella liability. Does anybody know what that is? So, as I was saying earlier, certain industries require large numbers, or sorry, high numbers of liability limits. Most people are okay with 1 or 2 million, but for example, if you have a business in the construction industry, most people that you do business with are going to say, look, if you want to do business with us, you're going to need to carry $5 million, or in some cases, $10 million liability for your car and your general liability, etc. That becomes quite expensive. So what most people do is they cap it at 5 million. And if you need a $10 million limit, then you get an umbrella to hover over for an extra 5 million at a lot cheaper than having these underlying policies increase to 10 million. So umbrella coverage is protection against catastrophic losses. It is generally written over various primary policies such as auto, commercial general liability, watercraft, employer's liability, etc. It provides excess limits when the limits of underlying liability policies are exhausted by the payment of claims. It drops down and picks up where the underlying policy leaves off when the aggregate limit of the underlying policy is exhausted by the payments of claim. It provides protection against the claims not covered by the underlying policies, and it is subject to the assumption by the named insured, the client, of a self-insured retention. So typically that self-insured retention is $10,000. That's another word for deductible. So the umbrella deductible is $10,000 on a commercial policy. Does that make sense? Next. There are both personal and commercial umbrella policies. Securing an umbrella policy saves on insurance costs, as it's cheaper to get an umbrella policy rather than have all your policies increase to high limits. We see a lot of people higher profile, like doctors, politicians, dentists, people with money, people with a lot of assets tend to carry an umbrella policy because they know that they're a bigger target for getting sued by random people because, you know, it is sort of a sure thing that they have money. Next. Well, we went through that very quickly. Any questions on any of this? I know, Jane, that and Randall, we didn't touch on errors and omissions, but we can discuss a little bit of that. Errors and omissions is specifically excluded under the general liability policy. So if you have a business that requires errors and omissions coverage or professional liability, whichever you want to call it, you need to have a package that carries both.
Yeah, could you explain that a little bit more, the errors and omissions insurance?
Yes. So errors and omissions is used for people that provide advice, people that engineers that do drawings, teachers, doctors, insurance brokers, people that give advice like Jane, you, Randall. Those are different than somebody just slipping and falling, which is a general liability. So general liability is excluded from professional and vice versa. So you need to carry both.
So if I, as a business coach, whether with Wayfinders or not, if I give somebody some advice in business and it turns out that was bad advice and they fail at it, whether it was because of my advice or otherwise, but if they feel that it was my fault, then they could sue me for this. But this insurance, if the suit was successful, the insurance would cover the cost. Is that right?
It'll cover the cost to defend you regardless, whether you're liable or not.
Okay.
If you're not liable, you still need coverage for all those costs, lawyer costs, defense costs. So even if you're completely innocent, you want a policy to be able to do that for you. Now, if you are found liable and then there's an award given to this third party, most definitely you're going to be happy that you had a policy that responded properly.
Right. Okay. Now, Jane, do you have any questions for Evelinne? And you're on mute.
Yeah, no, I don't have any questions. I find it all very overwhelming. So like a foreign language to me. So I've read the policy that I've signed up for, and you know, luck of the draw, I think. And my a lot of coaches actually don't keep very intensive notes on their clients, and that's for protection purposes for themselves. It's,
Right.
and that's what I was advised when I was in my coach training.
Yeah, that would be good risk
100,
management. Yeah.
yes, that is a
But
good risk management practice.
and Jen raises a good question because a lot of insurance talk is very technical. And I'm assuming the reason why it is so technical is that because through the history of lawsuits and the courts and lawyers, and it is highly technical because there's so many different angles that you need to be able to cover in clear articulation without any ambiguities, oversights, and so on. You want to talk a little bit about that?
The one thing that I really wanted to let people know is that sometimes you have an operation, you talk to your broker, you get a policy, and you figured, great, I'm covered. And you start doing different things with your business, and you're uh, confident in the fact that you have a policy. However, what you disclose to the insurance company via broker or agent is what they're covering you for. So if you have any changes to your operations, you have to let them know because it is not covered. You're sued because of something that you forgot to mention. They're going to go to their document, their policy contract, and say, well, you never told us that. Sorry, we're denying claim. So very, very important to keep those lines of communication always open. Ask questions to your broker. What do I need? Sometimes I like to call clients sometimes when I have time, midterm, to say, have there been any changes? Because a lot of people just don't even think, oh yes, I'm doing this now. I moved to another location. Oh, now I've added eyebrow tinting to our nail place, and they don't even think of calling, and it's not covered unless you disclose it.
Yeah, those are good points. So it makes me wonder about some of the most common mistakes small business owners make in regard to their insurance.
Yeah, those are the most common, is just failure to communicate any changes.
Yeah,
That's a huge one. Um, or assuming that when you get a general liability policy, that you're covered for everything. No, you need errors and omissions for this. You need pollution coverage for that. You need cyber coverage if you're heavily involved in um, having fine information in your database. So those are things that you have to pay close attention to.
yeah, I can imagine angry plaintiffs of any sort, and the insurance companies and their lawyers. They are looking for loopholes, to get what they want, and it, you can't be thinking of them as either stupid or evil. This is just the reality of modern business management.
Right. As far as all the legal stuff, the legal lingo, um, we don't deal with it as much because as a broker, I'm not an adjuster.
Right.
But you have to become comfortable with the policy document that you're looking at. And if you don't understand it, ask questions, because it is quite, the insured. Most people don't know offhand, what is an insured? You are the insured. The insurer is the insurance company. So just little things like that, if you get to know, it makes it easier for you to decipher the policy documents.
Right. Based on what you've been talking about for this last while, I'm wondering if we shouldn't have a session on risk management itself, separate and above the insurance.
Right.
The way I'm
Well,
seeing it, there's so many things that can go wrong today. I mean, our world is so complex and intertwined. Everybody connects to everybody, and it's not like there's an ill intent. You just may accidentally step on somebody's toes with the best of intentions.
Right. So this is why you have to do your homework. Anybody that starts a business or has a business, I encourage them to make up a business plan and have it in paper, all the things that you need to do. Do your research, in your type of industry, what are the losses that they've faced? What's the trend? Can I avoid that? Um, of course, your third-party liability claims are rampant because of our economy. So be mindful of having signage and fixing little staircases that are faulty. Also, though, if you have a major loss, business interruption loss, make sure you document all your stuff. Have your documents from your tax. Sorry, I get to a point where I have a hard time spitting out words.
Yeah.
When you're bookkeeping, have it be spotless and up to date. That way, if you ever have a business interruption loss, the insurance company's not going to go, well, you're not a very good client. You're here and there and everywhere. So if you keep things in order, they're going to look at you a lot different than if you had a shoebox full of papers.
Right. And you know what you're reminding me of is some people in the computer industry who will um, uh, make it very clear that you not only need to have a backup, but you need to have a computer backup off-site in case of things like a fire or a robbery where your computer is stolen. If you want to make a
Right,
claim, you've got to have something off-site that you can rely on when you need it.
right. If you are handling a lot of data, client data, um, I really recommend that you somehow have really strong firewalls or have some sort of IT company look after that for you if it's beyond your knowledge. I am so technologically uh,
Yeah, like most of us.
I'm 100% inept. So I do have an IT company, and we haven't had issues with cyber attacks, but there was a surge here in Windermere where the power went off, and yeah, our computer, our server just, even though we had just gotten a new server, it was kaput. Well, luckily they saved everything, and we were able to restore all our information. But I mean, we have hundreds and hundreds of clients. How do I restore that if I didn't have my IT company? So sometimes you just have to spend that little bit of extra money to make sure that you're solid.
Right.
I, I was just going to say, I don't hear in any of the business classes or sessions I've done over the last decade, I've never heard anybody really talk about insurance for the business. And I, I, I think a lot of people go underinsured or not insured and just take their chances. And I just think that's a big mistake. And nobody talks about it as something you need to do or get or look into or
Right.
and that whole idea of risk management and discussing that for each kind of business person I met through this Wayfinders would be probably a good discussion to have at the table, don't you think, Randall?
Yes, that's absolutely right. In fact, I'm reminded that I've seen reports from a national organization, I can't remember which one, that said in Canada a lot of people are not going into business these days because of uncertainties. They don't know what all the risks are and how to manage them. So they just don't go into business. They would rather take a secure, stable job with some larger company where they feel safe. So we need to be able to show to small businesses that there is a safe way. The risk management and insurance, if we could kind of master the delivery of that information.
Right.
And that's partly why we have Evelinne here today.
And risk management and insurance comes after. The business plan comes first. Do
Right.
your due diligence, study what you need to make your business successful, what you're going to do, and stick to it. And once that business gets started, you implement your risk management practices and transfer the risk to an insurance policy. Now, some people, and of course, a lot of people are excellent business owners. They're diligent, organized. They're conscientious about making the place safe, and they feel, you know what, I don't need insurance. I'm ethical. I'm safe. Nothing's going to happen that would come out of my end. However, you don't need to be a bad business owner for bad luck to happen. Somebody else will, it's either fraudulent claim against you or a frivolous claim against you. And if you have a policy, I'd rather have a policy pay for the $500 an hour lawyer than coming out of my hard-earned dollars. So it's, it's all about money, whether or not your business can sustain a loss. And if it can't, then get your policy in order. Or policies.
Right.
Yes.
Okay, so we've got more lessons to provide coming up on related matters. But in the meantime, this will be posted on our site and on YouTube for our members and others to access. And we'll provide more information about how to contact Evelinne in case you have more questions or want to pursue an insurance policy that is custom built for your specific business requirements. And we're wrapping up the hour now. Jane, did you have anything more to ask or say?
Oh, it was helpful to be thinking about this yet again, and just hearing what you have to say about it. So thank you, Evelinne.
You're welcome. It was my pleasure.
And Evelinne, do you have any parting words?
Our world is changing very quickly. Cyber attacks, pay special attention to your database. It could get hacked and it's stolen and sold to people that knows. So pay special attention to your cyber security. And just be safe and practice good risk management program for yourself, and hopefully nothing happens, but if in the event that it does, you're well prepared.
Excellent. All right, well, with that then, I guess we're done for this episode.